I've got three client segments.
Yep.
One are getting ready to sell some of their shares to buy their home.
Yeah.
The second have their established portfolio that they're just investing regularly. They're going to have to weather the volatility. And then 50% group three, they're waiting for an opportunity. They have a loan facility ready to invest.
Yeah.
And so the question is, for group one,
Yep.
is now a bad time to sell? For group two, should they be moving anything around? And for the opportunist group, group three, is now an opportune time to invest everything, or is there a phase and approach?
First cohort, the money is needed somewhere in the future.
Yeah.
I think the last cohort you said that was pretty opportunistic. We're looking for
Yeah.
opportunities there. Is that right?
Yeah.
And in the middle, it's I'll weather this out. Don't want to take undue risk or something like that. So look, we're obviously dealing with uncertainty here.
Yeah.
It is one of the things we like to say is when we do asset allocation, we're peering into the fog of the future and trying to make it, it's an inexact science. But here we also have the fog of war. And I'm saying it to this first cohort to say, if you really need this, we don't know what's going to happen, but you've got to look at the probabilities. And there is a chance that there's a negative scenario. And the best way to think about this is it's not like the 70s because the US and the rest of the world is not nearly as oil dependent. It's not like .com because the technology companies, they're expensive, but they're also generating a whole lot of cash. And it's not like the GFC because there's not quite as much leverage. There's a little bit of that. So if all of those three things came together, you could have a problem that is a little bit like the 70s, a little bit like .com, and a little bit like the GFC. You could see 20% downside. So I think that's a very personal thing. Now, if you need that money in a year, you've just got to think about that and think about it ahead. How would I feel if markets were down 20% or if my diversified portfolio was down 15%? Am I going to feel bad about that? Or compared to feeling maybe a little bit better about getting another 10% because the sky is clear and the markets are off to the races again?